In this video, we will talk about Medicare tax calculations. Tax class would be single, not married. First scenario, single person making less than $200,000 a year, and the way that they are paid is hourly and they are paid weekly. Let's say that Bob makes $18.20 per hour and worked 46 hours that week. Also assume that the overtime hours remain constant for the year. The first thing we would do would calculate gross pay. So regular pay, $18.20 times 40 hours equals $728. Then we have to factor in the overtime pay because he worked 6 hours of overtime, so $18.20 per hour times the 1.5 premium times 6 hours of pay equals $163.80. To find the gross pay, just add the two together. Now, we must check to see how much he will make in a year. Obviously, he's not going to make over $200,000, but we'll go through the calculation anyway. So, gross pay per week, which is that, times 52 weeks would yield $46,373.60 of pay per year, which is well under the $200,000, which is the changeover for a higher Medicare tax rate. So because that's okay, we calculate the Medicare tax for that week, which is the $891.80 times the 1.45%, and Bob would pay $12.93 that week and every week. Scenario 2, still a single person, not married, making less than $200,000 a year. And instead of being a hourly employee, this person is salaried exempt, which they are exempt from receiving overtime. So let's say Bill makes $52,390 a year and gets paid bi-weekly every 2 weeks. Let's say he works 52 hours each week, which doesn't matter because he does not get paid overtime. Since he's salaried exempt, he does not receive overtime pay. So let's calculate his bi-weekly pay. Now, if he's paid weekly, you're going to divide his salary by 52 weeks. If he's paid bi-weekly, you're going to divide it by 26. So to calculate biweekly gross pay, we take his annual salary, which is $52,390, and divide it by the number of pay periods in a year, which is 26 biweekly, and his biweekly gross pay would then be $2,015. Since he's single and he makes less than $200,000 in a year, we're going to use just the 1.45% Medicare tax. So we take the $2,015 for the biweekly gross pay times the 1.45%, and his Medicare tax payment for that pay period would be $29.22. Looking at scenario 3, we would have a single person making less than $200,000 a year. They are now classified for this example as salaried non-exempt, which means they will get paid overtime even though they're paid a salary. So let's say Susie makes $52,416 a year, and in this case gets paid weekly. She works 52 hours per week. Since she is salaried non-exempt, she is eligible for overtime pay, and we're going to assume overtime hours remain constant for the year, which makes our calculations much simpler. First, since she is eligible for overtime, we need to convert her salary to an equivalent hourly wage so we can figure out how much your weekly pay is with overtime added in. So if you take the $52,416 of annual salary, divide by the number of hours in the year, you would come up with a equivalent hourly wage of $25.20. Then we're going to calculate weekly pay, factoring in overtime. And so regular pay, $25.20 times 40 hours would yield $1,008 of regular pay. We have to factor in the 12 hours of overtime because she works 12 hours over 40 times the 1.5 premium pay times the $25.20. That equates to $453.60. If you add these two together, her gross pay is $1,461.60 for that particular week. Now, this is not going to be the case, but we still need to check if her gross pay for the year is less than $200,000, because if it's over, we have to do something additional. So her gross pay per week times 52 weeks, if you take this number times 52, her gross annual pay is $76,003.20, which is going to be less than the $200,000. So even though her salary is only $52,416, she makes more due to overtime, quite a bit more. Since she is single and making less than $200,000 a year, we're going to use the 1.45% Medicare tax only. The calculation for the Medicare tax for the week is simply her weekly gross pay times the 1.45%, or $21.19. Scenario 4 is a bit different. In this case, we're going to have a single person making more than $200,000 a year, and we're going to consider the first scenario as a salaried exempt employee. We'll say Sammy makes $209,820 a year and gets paid bi-weekly. She works 58 hours each week, but since she's considered to be salaried exempt, she does not qualify for overtime pay, so we just ignore the overtime pay. First thing we're going to do is calculate how much Medicare tax for the year. Since she is single, makes more than $200,000, any amount over $200,000 is going to be charged at 2.35% rather than the 1.45% below $200,000. So her lower Medicare tax rate is going to be $200,000 times the 1.45%. And so you multiply those two and you come up with $2,900 for the year. $9,820, which is the amount above the $200,000, has to be taxed at 2.35% for Medicare. So we take that number times 2.35 to come up with this number. You add the two together to come up with $3,130.77. We have to calculate the Medicare tax for each pay period. Since she is paid bi-weekly, there are 26 pay periods in the year instead of 52. So we take her total Medicare tax bill of $3,130.77 and divide it by the number of pay periods, which equates to $120.41 per pay period. Scenario 5, we have a single person making more than $200,000 a year. In this case, the person is salaried non-exempt, which means they're eligible for overtime. So let's say Jimmy makes $189,280 a year and gets paid weekly. He works 45 hours each week. Since salary non-exempt, he is eligible for overtime pay. We're going to assume overtime hours remain constant for the year. Although Jimmy makes $189,280 a year, with overtime, you'll find out that he's going to make over $200,000, which means he's going to have to pay those two different Medicare tax rates. So you cannot just go by this number. You have to factor in overtime if he is salaried non-exempt. So since he's eligible for overtime, we have to convert his salary to an equivalent hourly wage. So $189,280 divided by 2,080 hours in a year, which comes out to a $91 per hour equivalent wage. So then we have to calculate his weekly pay, considering overtime. So $91 per hour times 40 hours of regular pay yields that number. He has 5 hours of overtime each week, so $91 per hour times the 1.5 bonus pay for overtime times the 5 hours overtime yields this number. If you add these two numbers up, he makes $4,322.50 gross pay every week. Before we determine Medicare tax, we have to determine if he exceeds the $200,000 minimum for single people. So we take his gross pay per week, which is this, times the number of pay periods in the year, which is 52, and find out that he makes almost $225,000 a year, which means he's going to have to pay the higher premium for anything over $200,000. So since single and making more than $200,000 in a year, we have to use the 2.35% Medicare tax over any earnings over $200,000. So we're going to calculate how much Medicare tax for the year. We look at the lower rate, $200,000 times the 1.45%, and that yields $2,900 in taxes. He also makes $24,770 above 200, so we take that number times the 2.35%, which yields that number. If you add the two together, you come up with that. The last thing we do is we take this number and we divide it by the number of pay periods for him, which is, in this case, 52 weeks. So his Medicare tax for each week is $66.96.